forex, traders may trade with more capital than the amount they deposited in their account. This is simply because of leverage. Leverage allows you to increase your trading potential. For example, say that you deposited 10,000 euros in your account and your choice of leverage is 1 to 100. The math is easy. 10,000 times 100 equals 1 million. Now your trading capital is 1 million euros. Let's say you buy 10 lots EUR/USD at 1.20 and then sometime later you close the position 100 pips higher at 1.21. You made a profit of 1 million times 0.01, which equals $10,000. You almost doubled your account. Now, say you decide to sell 10 lots of EUR/USD at 1.22, but unfortunately the exchange rate falls and you eventually close the trade 50 pips lower at 1.2150. You made a loss of 1 million times 0.05, which equals $5,000. You lost almost half of your capital. Remember that leverage is a double-edged sword. It allows you to increase your trading capital and have increased profits, but at the same time, it may incur increased losses.